Emotion, it's the number one reason why people lose money in the stock market. And those two emotions are fear and greed. Fear that you're going to miss out on a trade, greed you stay in a trade too long, fear that your stock has gone down and now you got to sell, greed you trade on margin and end up owing money from a bad trade. So the following video is just going to show you a great way to control your emotions while you're trading. So one of the things that you want to do is there are two sides to the way your mind thinks. You have your emotional side and your rational side. Your emotional side is going to make the bad decisions when it comes to investing. Okay, so what you want to do is you want to be able to use the rational mind when making trading decisions. So when you decide to buy a stock or a cryptocurrency or whatever financial asset you want to get in, a great thing to do is write out a little rationale. Why are you buying this? What are your prospects for the stock or the commodity or the cryptocurrency? Write it out. So if you see the price of this investment go down, instead of becoming emotional at first, you can look over the rationale and say, oh, wait, this company, it has blah, 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 this and that. I should hold on to it. Yes, the market has gone down. The price of the stock goes down, but this is a fundamentally good investment. And I just need to stick with it. So writing a little rationale, one paragraph, it just could be the financial numbers that you saw that you determined this is a good investment or whatever. That will really help you down. Another thing that helps is the majority of your money should be focused on a long-term investment, and it really should be like in a low-cost index fund. The VTSAX, that's the Vanguard S&P 500 mutual fund. That'll let you sleep at night. You really don't want to get too speculative with too much of your money because the emotional part will override the rational part every time. So the majority of your money should be something that's invested for the long term. Okay. When it comes to your speculative funds, only speculate with money you're willing to lose completely. Consider it money you would take to Vegas. As far as like the short term, any investment in cryptocurrency, any short term investment. And one of the great gauges is how much of your money should be speculative money is how much money that allow you to sleep at night. If you're getting up and checking a quote on a cryptocurrency at 10 o'clock at night, you have too much of an investment in that cryptocurrency. You need to reduce it because you will never be able to be successful with speculative trading if you're constantly checking the quote price and you're constantly worrying about it, because you will get shaken out of the trade. Another thing is, this is actually what I discussed in my very first video, is dollar cost average into a position. This will allow you to not think about, oh, did I get in at the right price? If you just go in over time, usually you're going to get in at a better price than you would have by throwing all your money in at one time. Another thing is focus on the long-term goals rather than his short-term returns, because the short-term is so volatile. You can't gauge your investment success on what happens every 3, 6 months, or even 1 year. You have to look at least 5, 10 years down the road, and when you're thinking 5, 10 years down the road, you're not going to be over trading and get too emotionally wrapped up in each trade. So even with your short-term trades, think at least, is this stock that I'm buying, is it worth holding for more than a year? Now, the only exception is if you're trading, if you're doing some sort of timing strategy or seasonal strategy. But in that case, your trade is very time-based, where you have a strict, I'm getting in at this time and gain out at another time. But if you're just looking at, let's say, if you find one stock you think is going to be the next Amazon and you're using this as a speculative buy, you got to hold that stock at least for a year. And if it's a good stock, it's worth holding for a year despite the gyrations of the market. Another way to control your emotions is don't compare yourself to other returns or to another index when at least it comes to your speculative fund. If you make 10% return in 1 month, which is excellent, someone out there is going to have a 20% return because they're doing something, they either got really lucky, they're extraordinarily good, or they're trading on margin. And if you compare yourself to another fund or to someone else, you're going to end up over trading and becoming very reckless. So, don't compare yourself to anybody else. Just use whatever system you're using or whatever rationale you're using, and just use that. Don't even look at your own returns and then compare them to someone else. And, finally, just based on what I just said previously, someone is always going to have better returns than you. You're never going to have the best returns out of everybody in the universe. So don't try to be the best trader in the history of trading. Just make every decision you make, entering a position rationale based, every exit position rationale based. Think as long term as you possibly can, even for your short term trades. Try to think about, I'm going to buy this stock, hold it for at least a year, or buy this cryptocurrency and hold it at least for a year. Don't compare yourself to other funds or other investors, and always realize someone's always, in the short term, someone's always going to trade better than you, but you really want to be focused on the long term, because if you're very rational with your thinking rather than emotional, in the long term, you're going to outperform a lot of these people who were great performers in the short term anyway. Okay, so I hope this helped you a lot. Thanks. See you in the next video.